Hey, good afternoon, everybody. Brad Macbeth here. Great to be with you again. We're live here today for the Simple Plan Live, and we've got some great information for you today. Looking forward to sharing that with you. I hope you're having a great week. Listen, things are completely bonkers out there, so what we want to do is help you get some good, solid understanding of where things are at in your life financially so you can make good choices, good decisions, and just have a great sense of where things are at financially. For those of you who are Dave Ramsey followers, of course, you know that we're big on those types of steps as well. And today, though, we're going to be talking about financial security. And, you know, one of the most important aspects, and it's interesting, when you go and you get into this business, and I've been doing it for, about 18 years. I'm a licensed advisor dealing in insurance and investments. And, I was really surprised when I first went to get the training going so I could get tested and licensed and all that good stuff. What really surprised me in all the courses was that and many of these were investing courses, but they always talked about a financial plan. And the number one thing they always talked about, first and foremost, was life insurance. And, that was puzzling to me at first. Now, today, I completely understand that because you know what? If you don't have a good financial security plan in place, the best laid plans can be blown up by the things that go on in life. And so today, we're going to be talking about life insurance and especially some of the great opportunities there are today to deal with some things that are kind of interesting because of what's going on around us. Now, for example, we're in week 12, 14 of kind of pandemic lockdown here. And, we've had a lot of restrictions put on our lives depending on the jurisdiction you're in. We're in British Columbia. So yeah, things are feeling pretty confined, starting to kind of come back. Maybe we're opening up some, little more people to hang out with. We can go to a restaurant. Pretty soon, I think we're going to be able to travel within British Columbia. But, life has been challenging, quite difficult for some of us, unpleasant for many. And but there are some hidden advantages to what's been going on. And so one of the things that the pandemic has brought about is some changes in what goes on when we get life insurance. Now, we're going to look at a couple of things today. We're going to look at how to figure out how much life insurance you need. And we're going to show you how you can actually go and check out how much you might pay for life insurance, shopping through all the different life insurers that are out there in Canada, all the major ones. That's what we do. We're an insurance broker, so we don't work with any particular company. We just work with whoever's got the best product for the best people at the right time. And so part of the process of getting life insurance is that based on the amount of insurance that you're getting, you have to jump through some hoops. You've got to fill out an application that's got a lot of really nosy questions on it about health and lifestyle. And there can often be some testing that's done. Now, normally, usually for people that are, let's say, under 50, you're looking at maybe being able to get up to about $500,000 worth of life insurance coverage without having to do anything more than answer questions. If you were getting more than that, often you would have to get a blood test, give a urine sample. Someone would come to your house to maybe put you on a scale, take your blood pressure, that kind of thing. And when someone comes to your house, we call that a paramedical visit. So it's usually a nurse that comes out, brings whatever tools she needs or he needs, and they get a blood sample, often a urine sample. And, it feels kind of intrusive, and a lot of people don't like needles. I get that completely. But these interesting times we're living in have afforded us some interesting opportunities. Because, of course, nobody's been going out to anybody's house to be gathering blood samples or urine samples for the last 3 months. And so insurance companies have played some catch up on that. And what they've done is they have raised the limits at which we can get insurance. So, for example, normally you're looking at $500,000 is the maximum amount of life insurance you can get without a blood or a urine sample. But various insurers, and it took them time to kind of get on board and do this. But once they realized, listen, this thing's going to last for a while, and we need to be doing business here, what they did was they started raising those limits. And so now the limit is not $500,000. The limit is up to $2 million. You can get up to $2 million worth of life insurance coverage now without giving a blood or a urine sample. Now, I just heard yesterday that the paramedical folks are beginning to do their visits again. And so at some point, assuming that goes well, at some point, the insurance companies are going to put their restrictions back in place. But that's going to be a little ways off because there's a big backlog already of people that need to get those samples done. So for the time being, we've got this great opportunity where simply by answering questions, you can get up to $2 million worth of life insurance coverage. And I can tell you that the typical young family making just kind of a regular income here in Canada, if you've got young children at home, it's very common that people need up toward or even over $1 million worth of life insurance coverage. So the fact that you can get that amount of coverage now without having to go through the urine sample, blood sample hoops, all that stuff is great. Now, the other thing is that the insurance companies have finally hauled themselves into the 21st century, and now we do all those applications online. So what that means is nobody has to come to your house for anything. We do a face-to-face meeting online, or sometimes we just do it over the telephone, and we ask the questions, and usually that's about it. And within a number of days, maybe a week or two, that life insurance coverage is issued. It is so much simpler and faster right now than it's been in the past. And believe me, when you can do it by making only one appointment and doing it from the comfort of your own living room without somebody coming over there, or worse yet, you having to bundle the kids up or get a babysitter, go out to somebody's office and sit there for 1 to 2 hours while you answer a bunch of questions, life is greatly improved. A lot of people are telling me they much prefer the way that we're able to do these things now. Okay, so that's one way that things are much better, that you can get coverage, a higher level of coverage, without having to give blood or urine samples. Also, all this can be done online now. So what I wanted to also share with you is what it takes or what you can do to figure out how much life insurance you need and what you're going to pay for that. So there's a government tax on premiums. So this insurance quote tool queries all the major insurers out there and lets you know how much you're going to pay for life insurance coverage. And so what we've got here is, first we define which province we're using. And as I was saying, the reason for that is because there's tax, and it's a provincial tax, so it varies from province to province as to what you're going to pay on life insurance premiums. Then you're going to put your birth date in there because age is a big factor in how much you pay for your life insurance, your gender, whether you smoke or not. And those are really the three major factors that affect how much you're going to pay for life insurance: your age, your gender, and whether you smoke or not. Your gender, because interestingly, of course, most of us know that men die younger than women. And so they're at a higher risk factor, therefore they pay more for life insurance. Also interestingly, on health insurance, things like critical illness insurance, men pay less. I think not because they don't get as sick, but I think because they don't go to the doctor as much, so they don't find out they're sick as much. So anyway, you can put your name or your phone and your phone number in there if you want. You don't need to. And then you have to put an email address in there. I'll just put mine in there quickly. All right. And so right now we're looking at, well, let's go for that $1 million worth of insurance, because that's, as I say, a fairly common amount these days. All right, so we do that, and then we just click on the Compare Now, and it gives us the results from all these different insurers. So you can see at that age, now we specified that we wanted 20 years of term coverage. You know, you might want 10 or 15. You can in fact switch there and figure it out. Let's say you want to go to 25 instead. You just do that and recalculate. And so we'll see that for a person this age, now this person would be 45. That's their insurance age, even though they're only age 44 insurance is calculated off of your nearest birthday, not your last birthday. So if you're more than 6 months past your last birthday, your nearest birthday is your next birthday. So 45 years old, that person is going to pay about $160 a month for 25-year term insurance. Now, if you go, well, gosh, that seems like a lot, maybe I'll go with a shorter term. You go down to 15-year term and you'll find that it's going to be about half the price, $73 a month. You get the idea. And so this tool will show you which insurer offers the best pricing for your age and amount. And we see RBC keeps coming out at the top of this list. So you can see here you've got RBC Insurance, SSQ, Empire Life, Canada Life, and on and on. All the major insurers in Canada, they're different prices. You can see that it's fairly consistent. But here's the interesting thing, you know, a few dollars a month doesn't sound that much. Well, if I pay 55 or 60, is that really that big a deal? And by all means, you want to make sure you're getting the insurance company that you prefer. And there can be preferences for a number of reasons. But if you think of it this way, $5 a month, that's $60 a year. But for $15 or 15 years, that's $900. So you're actually making that $5 is really a $900 decision if you keep your insurance until the term expires. All right, so that gives you a good sense of what you're going to pay for life insurance. You can go and work through this tool, put in your own parameters there and find out. You'll see here we selected Preferred Plus. One of the things that happens is based on your the information you provide on your insurance application, the insurance company sets a rate specific to you. And so that is based on a whole bunch of factors, age and amount and term, but also an assessment of your health. Now, not many people qualify for Preferred Plus rates. Those are the best possible rates, which means they've determined you're in the best possible health category. We have what are called regular or standard rates. And then there's a couple of categories in between that, regular plus and preferred. Generally speaking, there's 3 or 4 different pricing categories for insurers, again, depending on the age and amount. So you'll want to check both what you might pay for preferred, which you can see in this case, for this amount, 10-year level term is $53.82 is the least expensive. But again, that's at the Preferred Plus rate. So if we go back and then say, well, you know, let's look at the regular rates here. Come on, there we go. So in the health class, we select regular, and we were on 15-year level term there, just to compare. So we were at, 53, and we'll compare again. And now we see that it's 114. That's quite a difference, right? You're talking $40 a month, $500 a year. So yeah, it's going to depend on your level of health as well as your age, the amount of insurance, the term of insurance, whether you smoke or not. Okay, so and you can get to that by going to our website. Again, it's on your screen there, getthesimpleplan.com. There's a big, in fact, I'll even show it to you. There's a big button right at the top, or big link right at the top. This has gone to the mobile size, but instant life quotes right there. All right, so now we also have a calculator on the site there that'll tell you how much life insurance you need. And this is simply a calculation. You've probably heard a rule of thumb. Hey, listen, 10 times annual income. And sometimes 10 to 12 times annual income. Often a real calculation will come out with that amount. But we like to do a more precise calculation for all our clients. And this is on our website. We have a simplified version of the tool that we use. So we ask the questions to try to help you understand what the different amounts are for. So first off, how much money, how much in dollars of your income would your family need per year if you passed away? So again, it's per year, and it's how much is your family going to need. So let's say you're a parent, you're bringing in $50,000 of income into the home annually, And you figure that, well, my kids are only 2 and they're going to need it for, at least until they're 20. And they're going to need all of it. I don't want their lifestyle to be eroded. So we're going to put in $50,000 there. All right. And how many years of this income would your family need if you passed away? Okay, well, if they're 2 years old and you say, I want them to have that kind of support until they're age 20, we're going to pick 18 years. Now, often people want to pay off their mortgage if they die. That's why people often have mortgage insurance, which is a whole other topic. But so let's say this person owes $150,000 on their mortgage. Usually people want all their debts paid off as well. Hopefully, once you've worked with us for a while, you won't have any debt. But let's say this person's got $15,000 in various debts. When we ask how much you have in investments, this would be investments that are not set aside for retirement, because we don't want to touch the retirement nest egg. So we'll just say 0 here. This person doesn't have any investments other than their retirement investments. Now, how much would you need for final expenses? So generally, we recommend a minimum of $10,000 for funeral expenses. I like to add in another $5,000 for estate and legal expenses. And obviously, if you know that there's going to be tax on your estate, you want to accommodate that as well. Now, why money for estate and legal taxes? Well, my wife and I just went through the process of having all our final planning documents, if you want to call them that, done. So will, power of attorney, and there's a number of other documents. Representation agreement has to do with kind of who gets to help decide what if you're unable to make decisions for yourself from a healthcare point of view. So it's a pretty complex business. Fortunately, we don't have to do it that often. But one of the questions that came up was, who do you want to be it's called trustee or executor of your will? That is the person that's going to be in charge of dealing with your estate. And so here's the challenge, is that that's a very messy and complicated business, even on relatively simple estates. So it's not necessarily in anybody's wheelhouse that you know well that you would be willing to task with this. And often we're looking for a younger relative, maybe it's a child that we're going to put down to do this. Well, just because they're not a lawyer or an accountant, so they don't necessarily know all the bells and whistles of doing this stuff, doesn't mean that they can't do it, because they can hire help. And that's what I put the legal and estate expenses in there for. So we're going to cover that in another episode in a much more comprehensive way, but I just wanted to give you an idea of that. So generally speaking, I would recommend at least $15,000, $10,000 for final expenses, funeral, what have you, $5,000 for estate and legal. And then we're also going to do a calculation here that's about education for your children. Now, if you don't, and that's a philosophical question, there are people who are like, well, yeah, I don't feel like I need to provide for my children's education. But if you're of a mind that you want to do that, then what we're going to do is we're going to figure out how many kids you have and how old they are, and then figure out that we get enough money accumulated for them to get some education, should you pass away unexpectedly. Okay, so in this case, let's say that we've got we got a child that was born in 2014, one born in 2012, and one born in 2010. All right. Now, if we scroll down here, there's that magical $1 million number again. And it breaks down into what this money is for. It's really for 3 things. There's $180,000 needed for immediate expenses. And so that's to pay off to pay off the mortgage, pay off the creditors, any debts, what have you, and have some money for estate, legal, and funeral expenses. Now, this amount to generate ongoing income, that comes simply from a calculation about how much money you need, $50,000 a year, for 18 years. And what's going to happen is that's going to create a lump sum of money that you're going to invest and then draw down to zero over those 18 years, taking $50,000 a year. We also allow for inflation in this. So that's going to give your family enough to invest conservatively, draw an income for 18 years of $50,000, the equivalent of $50,000 in today's dollars, and make sure they're well taken care of. And then finally, we have an amount needed for children's education. And you can see if we take that out, that number goes down, right? 2014, boop, there we go. We've taken it down to zero. So if you don't want to do that, then you don't need to do that. So it's simply a calculation. And, there's nothing to really argue about. It's simply, well, how much do you want? So if you go, well, 929,000, that seems like a big number. Okay, well then what if we said, let's only set aside $35,000 for your family for those 18 years. Well, now we're down to 700, you can see. And so again, it's simply a calculation to help you determine exactly how much income you need. Also note that it was 20 times the annual income in this particular case with the original numbers we used. So that gives you a sense of what's available to help you with those two questions. How much life insurance do I need? And how much is it going to cost me? And so I want to remind you again that the main reason we're thinking about life insurance, particularly now, is that we are in a particularly interesting period. You can get $2 million of coverage rather than $500,000 without having to be poked, prodded, or have anyone come to your house. And that can be done relatively quickly. We're finding a lot of people are getting their insurance issued within a couple of weeks right now. So that's just one of the few happy bonuses of what's going on with the pandemic. Now, there's one other big thing you want to consider, which is that life insurance right now is cheaper than it's ever been. Since I got into this business, the cost of term life insurance has gone down every year over the last 18 years. There's a number of reasons for that. One of them is that people are living longer. We're taking better care of ourselves. We have a better medical system, so people don't die as young, and therefore life insurance isn't having to be paid out as much. Now, we are probably at the bottom of where the pricing is going to go, and here's why. One of the major factors that affects the price of life insurance is interest rates. And that's because insurers take all this money. It's really like a giant GoFundMe. I'm always amazed at people going, oh, I'll use GoFundMe. It's like, well, that's all life insurance is. It's a giant GoFundMe system, only you know that you're going to get the money that you need if you need it. And you also know that you're helping other people who are in need because somebody died unexpectedly. And so with life insurance, the life insurer collects all these premiums. They take that money and they invest it. And while it's invested, it's growing. Now, because they are going to have to pay out, and believe me, they know. They might not know exactly when I am going to die, but they do know for a male aged 59 who weighs this, that, and the other, and with this particular health history, they know on average how old that guy's going to be when he dies. So they have to set aside, they have to have the money to pay out when that person comes to collect or their family comes to collect. And so they invest conservatively. They aren't taking big risks with much of the money they're investing. Most of it is invested fairly conservatively. And therefore, those types of investments tend to be highly affected by interest rates. Now, interest rates are crazy low right now. The base rate in Canada, set by the Bank of Canada, is 0.25%. Well, that's getting pretty close to zero. And once we go past that, well, the banks are going to start paying us. We're going to start paying the banks in order to take our money and hang on to it. And that sounds ridiculous, but that is exactly what has gone on in Japan for quite a long time and has also been a problem at times in Germany. So it affects insurance rates in that the less of an investment return that they can get on the premiums they've collected, the more premium they have to collect in order to be able to pay out everybody. So with insurance, your rates are guaranteed. So it's not like they can up your rate if your policy is already in force. So what happens is, going forward, new insurance policies will have some higher premiums. So right now, we're probably at the lowest, I don't know this for sure, but we are probably at the lowest place that term insurance rates are going to be. It's not likely they're going to go much lower. Yes, there may be health improvements that continue to drive them somewhat lower, but with interest rates as low as they are, that is going to have the effect of driving those insurance rates up. So to state it simply, it's never been easier to get a fairly high amount of insurance without having to jump through all the hoops. And secondly, the price is probably as low as it's going to be. So what I suggest is that you go and start looking at how much you want. How much insurance do you need? And if you've already got insurance, go and check it out. Go and check, do you have the right amount of insurance? And how much are you paying? Now, of course, if you bought insurance 5 years ago, you're going to pay more for it today than you did 5 years ago because you're 5 years older. But what you can look forward to is, how much longer am I going to need insurance? So let me do some comparison shopping. So these are the two addresses you can go to on our website, www.getthesimpleplan.com/quotes, to find out how much it might cost you to get life insurance from a variety of Canadian insurers, and www.getthesimpleplan.com/how much, in order to calculate how much life insurance your family should have. Generally speaking, we find that most people don't have the level of coverage that they should have. Some do. In fact, we find some who have more than they need because their kids have gotten older and they've got more money and they're self-insuring now. And so we often help them get reduce the amount of coverage they have. Also, we know there's a lot of people out there that have bought insurance with cash value in it, whether it's universal life or whole life, that it's not necessarily the right product for them and it's very expensive. And so we help them to get term insurance so they can really bring their costs down. And often that'll help them be able to afford the amount of coverage they should have. Anyway, that's it. I just wanted to share that for you today. The main message for today is it's easier than ever to get life insurance, and it's cheaper than ever to get life insurance. And both of those situations are not going to last. We have a window here, probably on the simplicity and ease of getting the insurance. That's maybe going to last a few more months, depending on how things go with the pandemic. And then with the pricing, I would anticipate in the next 3 to 12 months, we're going to start seeing insurers putting their rates up. Often they do that when we go through a year end. So it may happen, at the end of 2020 here. Anyway, that's it for today. If you have any questions, drop us a line. You can do that through our website, getthesimpleplan.com, and happy to answer any questions. And in fact, on Fridays, we do our live broadcast called Ask an Advisor. So quite possible that we might take your question and answer it live. Anyway, thanks very much. Hope you're having a great day, and we'll see you on Friday.